hari kelima rangkaian dari webinar yang diadakan oleh Toko Kripto. Dan kembali saya, Nelsi Hombing, senang sekali dipercaya untuk membawakan webinar ini selama 2 jam ke depan, sampai tepat jam 9 waktu Indonesia bagian Barat. Saya mau menyapa dulu untuk seluruh peserta webinar di kesempatan malam hari ini di seluruh Indonesia, dimanapun Anda berada, streaming baik itu lewat gadget, lewat handphone, ataupun lewat laptop. Saya doakan semoga Bapak Ibu sekalian dalam kondisi sehat, ya. Dan juga kita di sini akan sama-sama belajar mengenai, untuk topik malam hari ini adalah how does decentralized exchanges differ from traditional exchanges, ya. Ada apa aja di webinar untuk kesempatan malam hari ini, tepat di tanggal 25 Agustus 2020. Seperti biasa, webinar di kesempatan malam hari ini kita akan memiliki keynote speaker yang akan berbagi insight mengenai decentralized exchange, baik itu decentralized exchanges maupun traditional exchanges, dan juga nanti akan ada sesi panel diskusi bersama beberapa narasumber yang akan nanti saya undang tentunya, dan juga nanti kita akan mengundi ada 10 pemenang beruntung yang akan mendapatkan hadiah masing-masing sebesar $20. Apakah malam hari ini adalah kesempatan Anda untuk menjadi pemenang? Mudah-mudahan, berdoa dari sekarang ya. Dan juga nanti di akhir acara kita akan menyediakan QR Code untuk Anda pindai atau scan sebagai tanda bahwa Anda mengikuti webinar di kesempatan malam hari ini tanggal 25 Agustus 2020, dan nanti keywordnya itu adalah exchanges ya. Sebelum kita mulai, untuk Anda yang memiliki pertanyaan, feel free untuk drop your question di kolom komen ya, di platform manapun Anda sedang menyaksikan webinar saat malam hari ini. Nanti akan dikurasi oleh kami dan akan dibacakan setelah selesai panel discussion barengan sama panelis. Ya, jadi nanti akan ada sesi Q&A tersendiri, tapi itu nanti setelah panel diskusi barengan sama panelis. Ya, yang jelas malam hari ini tanpa berpanjang lebar lagi, sekali lagi kami mohon kesediaan Bapak Ibu sekalian dan juga para peserta webinar untuk stay sampai dengan akhir acara nanti. Kita akan melakukan webinar selama 2 jam ke depan ya. Mengingatkan sekali lagi untuk Anda yang memiliki pertanyaan, feel free ya, jangan ragu-ragu, kita akan belajar bersama daripada dipendam pertanyaannya ya kan. Mendingan nanti Anda drop question di di kolom komentar ya yang ada di platform sosial media tempat Anda menyaksikan webinar ini. Oke, siap kalau begitu tanpa berpanjang lebar lagi. Nanti akan saya panggilkan keynote speaker kita yang pertama. Yang jelas malam hari ini akan ada 2 keynote speaker yang akan mengisi webinar di kesempatan malam hari ini. Oh iya, untuk Q&A nanti akan ada sesi sendiri setelah panel discussion. Jadi sekali lagi saya ingatkan, daripada pertanyaannya dipendam sendiri ya malam hari ini, mendingan drop your question ya. Oke, siap kalau begitu tanpa berpanjang lebar lagi, saya akan memanggilkan keynote speaker kita yang pertama. Ya, penasaran kira-kira siapa keynote speaker kita yang pertama? Sekali lagi, tema untuk malam hari ini adalah how does decentralized exchanges differ from traditional exchanges? Mungkin ini juga menjadi pertanyaan Bapak Ibu sekalian ya. Mudah-mudahan di malam hari ini kita belajar bersama di webinar dan terjawab semua rasa penasaran Bapak Ibu sekalian. Oke, for the first keynote speaker, kita akan ketemu dengan Dennis Omer. Good evening, Dennis.
Hi everyone.
Dennis. Oh, hi.
Nice to be
You're
here.
already on the call for tonight. How are you, Dennis?
Yeah, I'm good. How are you guys? How's everyone?
Good. Before you start your presentation, allow me to read your CV first to our audience. Dennis Omer is from Kyber Network, right? Dennis is the head of ecosystem growth of Kyber Network, which is one of the leading decentralized exchange protocols in the globe. Dennis is also CEO and co-founder of CryptoDC.capital and ICODueDiligence.com. Dennis. Hello,
yes.
Dennis.
So, hi. Yes. So, shall we start?
Yes, for the next 20 minutes, ladies and gentlemen, please welcome Dennis Omer.
Thank you for that nice introduction. Yeah, my name is Dennis. I'm the head of ecosystem growth at Kyber Network. And before I jump in, I just want to thank all the organizers for doing such a great job of organizing this event. I think it's been a super interesting 4 or 5 days. The talkers have been super smart and really passionate about this space, and I've been really excited to see just how much we've come in the last 12 to 18 months in the DeFi space. So I think in terms of organizing a conference, this is great timing as well, because 18 months ago, none of this like really existed as a strong narrative. We didn't have decentralized financial tools. We didn't have the infrastructure. We had Bitcoin, and then we had many abstract ideas about what decentralization is and what blockchains is. And we're saying, yes, this is very useful. But now finally, with decentralized finance, we're seeing the applications of it. We're seeing the benefits of this technology. So Bitcoin was a good example of a store of value and a medium of exchange. But what blockchains can do to our traditional, to our society, to our finance is much, much more than just store of value and medium of exchange. And here what I'm talking about is value exchange, swapping one asset to the other. It could be stocks, equity, bonds, real estate, literally anything. It could be processing power. And we still live in a system where we have a lot of friction in our financial structure, in our payment system. And if we look at what the internet did to communication, it made communication instant. Like when I send an email now, it goes in milliseconds. Just the fact that we can have this conference is a great example of how instant the internet has made communication. But finance is definitely not instant. There is so much friction. And if you look at, for example, how just the fact that I can't send a payment, make a financial transaction on a weekend says it all. Like, it's so archaic. It's such an old system. There are multiple intermediaries. There's so many people involved and everyone's taking a cut, and it's a black box. In every layer, we've just added more and more old systems on top of each other till we have something very slow and doesn't really suit what the internet can provide for us. So now we have the blockchain and Bitcoin and crypto technology to kind of realize the true potential of this. And we're not just reducing friction, but we're also making more equitable systems. We're making more transparent systems. We're making systems where the stakeholders can see exactly what's going on, and the rules aren't skewed towards one side or another. Because in traditional finance, many of these asset exchange mechanisms are black boxes. You don't know what's happening, if it's working against you or not. Whereas in crypto, you have more egalitarian kind of free structure systems. And there's many examples of this. I mean, we've been hearing from people for the last 4 or 5 days, and we can see how much has been built. Decentralized exchanges, liquidity protocols, lending and borrowing platforms like Aave, like Compound. We built derivatives on top of that. We built insurance on top of that. So we've been building a lot that benefits from this reduction in friction. And I think the main benefit is because everyone is trying to do their own implementation, we literally have hundreds and hundreds of experiments playing out at the same time. And the benefit of this is that you have incredible innovation when you have so many experiments happening at the same time. And I mean, at Kyber, we're focused on the core technology of swapping one asset to another, because that's really at the heart of so many of our interactions in society, swapping A for B, like it could be commodities, stocks, processing power, computer storage. There's so much exchange happening, and we're focused on making it as simple as possible to swap one asset to another. And when we look at what's out there, there's so many different kinds of ways to make a market. You have like the traditional order books. You have automated market makers that can provide that exchange based on a curve. And if you want like a Y amount, then the price moves by X amount. There's different professional market makers. And I think what will make these platforms succeed is that they are transparent, they are verifiable, and as long as they get that key part, as long as they get the buyer and the seller ecosystem, so the buy and the supply side, as long as they can get that right, they can build systems that are healthy and balanced and growing. Because either the demand and supply side isn't working, then your market just isn't going to grow. So when we looked at the Kyber design side, we thought, okay, there's so many different types of order books out there, like build the system. And we saw the automated market makers, the central, like the order books, and we thought, okay, why don't we build a system that is open and can accept liquidity tools that exist on Ethereum? So, for example, you have Uniswap that has millions locked up in it. It's so easy to plug in Uniswap to Kyber, so we Kyber end users benefit. Play your liquidity into Kyber, and that's how we tackled the supply side kind of mechanism. So what happens is when someone wants to trade, because there's 40, 50 reserve managers or liquidity providers on Kyber, the Kyber smart contract looks at who is the best priced liquidity provider for that trade. So the end user is always getting the best price because they have an access to 40, 50 different choices, because they're not just limited to one or two different ones, you know? And the benefit of opening it like this is that it's so much easier to scale up. You know, the scalability, instead of having to go find users to do the buy and supply side, anyone can come in and plug in and you just scale like that. Now, coming to the demand side, we wanted to make Kyber as open as possible and not just focused on traders. We wanted anyone who needs to swap one asset to the other to be easily take that requirement from Kyber. So what I mean is there is much more than just trading. So let's say you want to buy an in-game item, or you want to buy a piece of artwork that's online, or you want to buy a conference ticket, and let's say it's sold in ETH. Many of these platforms denominate in ETH. So with a simple Kyber integration, the end user can send any token in their hot wallet. You can say DAI, you can send USDC, you can send like 70, 80 different ones, and Kyber will automatically convert that in the backend to what's required by the merchant. So, and that's what I mean by reducing liquidity, because if there wasn't Kyber to automatically convert it, this user that needs to pay for something in a different currency would have to send their crypto to a centralized exchange, have to wait 30, 40 confirmations, have to have done the KYC before then, have to put an order, wait, give up custody of their funds, and then withdraw it. Why? Just because they wanted to pay in A, but they only have B. You know, so Kyber kind of solves that problem. Now, when it comes to the DeFi side and how Kyber is super important to DeFi, we thought, okay, we're going to guarantee liquidity on layer 1 on Ethereum so that the price discovery, the swap execution, and the settlement can all happen in one go in one transaction. And what that lets you do is it turns Kyber into a financial primitive that you can fit into any other application that requires asset-to-asset token swap. And a good example of this is if you want to build a leverage trading dApp that wants to go on a 5x leverage position on Ether. What you could do right now is you could go to Ether, you could get Ether, put it in Maker and mint DAI. Get that DAI, sell it for Ether and get more Ether, get that Ether, put it into DAI, mint more DAI, just like a circle where you're just basically leveraging it. And this might be 10, 15, 20 different transactions. So by using Kyber, many DeFi dApps solve it by just in one transaction doing all the swapping that they need, you know, and that's what we were talking, that's the concept of composability, what we call Lego monies. So Kyber is providing the asset exchange. You can get your lending service from Compound Aave connected together. You can add insurance on top of it. You can, you know, do so many different things with these different pieces, and Kyber is a core piece of it. And basically that's how we've actually grown Kyber, because it's so easy to integrate, because the supply and the demand side can grow up. We've gone from a couple of $1 million worth of trading every month when we first launched in 2018 to 4 or 5 million every month a year later, to now we're doing, you know, 250 to $300 million volume every month. The growth has been tremendous. We're seeing hundreds of thousands of trades per month, just because the design choices we made, the demand side, the supply side growth is perfect for fostering that growth. So we talk a lot about decentralization, but when we think about it, very few projects today are actually truly decentralized, and nor should they be 100% decentralized from day one, because blockchains are still a new technology and we're still taking baby steps. We're kind of following our way through the dark and trying to understand what works with this technology and what doesn't work. And the risk is if you go too fast, you will definitely break things. And we've seen it happen before, like if anyone knows the DAO hack from 2016, which was like a venture capital fund, and it went far too fast, didn't do the proper audits, and it kind of crashed and took down $50 million with it and doesn't exist anymore. At Kyber, we really believe in decentralization. We believe in this journey, and we believe in making it gradually. So what we did is in 2018, we launched the mainnet, and we proved that the concept works. The concept of asset-to-asset exchange that is transparent, that is verifiable, that's not going to blow up and take everyone's money is sound. It works. In 2019, we took the next step of showing that both the supply side and the demand side can be scaled up, and there was a product market fit. Yes, people do want it because we've gone from $1 million per month to $400 million per month volume. And after those two, that's when we took the next big step and launched the Kyber DAO. So we said, okay, the space is kind of matured enough. There's various on-chain governance mechanisms that we understand, and we understand them enough to maybe put important decisions about Kyber into the hands of the stakeholders. Let's do this. Let's put it in the hands of the community because they do want Kyber to succeed. They do want it to become a valuable liquidity protocol. And we do want to redistribute the value in a more decentralized way. So how does it work? What does it do? So when you design an asset exchange, like a decentralized exchange or a liquidity provider, there are two key considerations. One of them is how much fees does each transaction cost? If you make the fees too high, then immediately you're uncompetitive to your end users because they're simply going to go somewhere else. If you take nothing, then you don't have the tools to incentivize the growth of the platform. You can't provide rebates to market makers, for example, to come and provide the liquidity. You can't capture any of the value. And the second thing that's important to any market making mechanism is how those fees are distributed. And you need to decide how to distribute them to ensure the optimal growth of the network. So basically, that's what the Kyber DAO does. You know, thousands of people, thousands of KNC holders, they vote in the Kyber DAO and they decide, A, how many fees to take, like how much fees is being taken, and how those fees are distributed, amongst other things. So for example, the first decision the Kyber DAO voted on, they decided to reduce the fees from 0.25% to 0.20%. Its next decision as a decentralized organization was that these fees at 0.20%, a quarter of it should be directed as rebates to market makers to attract them to bring more liquidity, because in the old system, they actually had to pay for it, and now they're going to get rewarded for it, for providing liquidity. They decided 5-6% of the reward, the transaction fee, should be converted to KNC and burnt. So over time, the reduction of supply is making KNC more valuable. And lastly, they decided that 70% of the fees should go to KNC holders to participate them, to incentivize them to participate in the Kyber DAO and to vote in the proposals and to be active community members. And you know, we also understand that not everyone wants to vote, so we even allowed those who don't want to vote to delegate their votes to pool masters to vote on their behalf. So that's the grand experiment. I mean, it's been live for 6 weeks, and I mean, it's surpassed all our expectations so far. More than a third of all outstanding KNC has been locked up in the DAO to vote. And I think it's a record high for Ethereum, and we had over 2,500 people who voted in the first vote. So that's where we are in our decentralization journey. You know, at Kyber in 2018, we started to prove the concept. We proved the concept was sound. 2019, we scaled up. We showed the demand and supply side can scale up easily and was needed by the community. And then we took the step the next step and introduce the Kyber DAO to decentralize decisions. And many other projects have taken similar steps to us. And that's why, we think the future is very bright for the DeFi space and for decentralized governance and for crypto as a whole, just because there's so many experiments going on. And every day we're building that knowledge base. And I'm sure in like a year's time, in the next Indonesia Blockchain Week, if it's DeFi related, the progress will be an order of magnitude larger. And I think from there, we're only a few stepping stones away from mainstream adoption. And that's my talk for today. I mean, if you're interested in reading more about the Kyber DAO, you can go to kyberdao.org to participate. And I don't know if there's a Q&A session, but thanks a lot for having me on this conference. I think it's been a great one so far. So nice to see how much progress we've made and the interest in this space. Thank you.
All right. Thank you, Dennis. I think we are going to open Q&A session for Dennis for the next 5 minutes untuk Bapak Ibu dan juga peserta webinar sekalian. Untuk Bapak Ibu yang memiliki pertanyaan ya mengenai materi yang sudah Dennis sampaikan di malam hari ini, silahkan drop your question di kolom komen. Nanti kami akan kurasi dan kami akan bacakan langsung kepada Dennis. Ya, oke. We have the first question, Dennis. What is Kyber's 2025 goal or 25-year goal, if you have any?
Well, we think that being able to exchange value instantly is super important. And we're believing in kind of spreading this around, and gradually it's being adopted everywhere. So in 5 years' time, I'd love it to be used anywhere that one asset needs to be swapped to another, within payments, within wallets, within DeFi dApps, within different sectors, just because of its huge benefits, the reduced friction, the transparency, not taking custody. So in 5 years' time, I see us at this growth level being just in a much bigger crypto world.
Amen to that. Next question is coming from Eggy. Hello, good evening. How decentralized exchanges would get profit from this? And can you tell me how DEX could be called a success DEX and get profit as much as they could?
Well, the beauty of it is it's decentralized. Well, first of all, it's programmable, so you can program your mechanism any way you want. If you want to make something that makes profit, you can design it as such. You can say I'm going to take 0.3% fee, and that goes straight into me. But I think that's going to be hard to do because it's so easy to just copy paste and remove that fee from it. I think what will define success is the decentralized exchanges that can differentiate themselves. But even those ones do have a transaction fee system to incentivize their growth. And I think it's a snowball. As you keep getting bigger, network effects keep growing, and that's how you grow. And that's partly what's happened to Kyber, what's definitely happened to Uniswap as well. So, they don't purely need to have a profit system. These systems can run on themselves if organized in a decentralized way, if the incentive structure is there.
All right, thank you, Dennis. And I think that was the last question for our Q&A session for tonight. I hope that you can stay a bit longer because we are going to meet again on the panelist session. Yeah, thank you so much, Dennis. I'll see you soon.
Thank you everyone. See you. Bye-bye.
See you. Bye. Egy, mudah-mudahan itu menjawab tadi pertanyaan dari Bapak Egy tentang decentralized exchanges. Oke, terima kasih banyak untuk Bapak Ibu dan juga peserta webinar yang sudah memberikan pertanyaannya di sesi keynote speaker kita yang pertama. Tapi jangan kemana-mana dulu, tentunya rangkaiannya masih akan panjang sampai dengan jam 9 malam nanti, waktu Indonesia bagian Barat. Kembali saya mengingatkan untuk Anda yang memiliki pertanyaan, silakan tulis pertanyaan Anda di kolom komentar di platform manapun Anda menyaksikan webinar malam hari ini. Dan juga nanti kita akan mengundi 10 orang pemenang beruntung yang akan mendapatkan hadiah masing-masing $20. Dan juga kami mohon kesediaannya Anda untuk mengikuti sampai dengan akhir acara webinar, karena nanti di akhir acara kami akan menyediakan QR code untuk Anda pindai atau scan untuk mengisi survei. Ya. Dan untuk keyword malam hari ini itu adalah exchanges. Oke, tanpa berpanjang lebar lagi, kita akan langsung masuk ke keynote speaker kita yang kedua. I would like to invite Ivan Poon on the screen. Hi, Ivan.
Hi, Neil. It's great to be here.
Hi. Yep, it's such an honor to see you here for tonight. But before you present your presentation, allow me to read your CV first. Ivan Poon is from Switch.io. He is the co-founder and also CEO of Switch.io Network. Ivan was previously appointed as CTO and director at several revenue-generating companies, such as Boombox, Payboy, and also Conjure Technologies. And also Ivan possesses rich experience in spearheading large-scale technical projects and also contributed greatly to the NEO core code, such as the implementation of NEP7 token standards across the NEO blockchain. All right, it was such a pleasure to see you here tonight. Ivan, are you ready to share your screen?
Yeah, sure. Thanks for the great introduction. Yeah, give me a second to share the screen.
Sure thing. Bapak Ibu sekalian,
right into it.
Yep. Keynote speaker kita yang kedua, ladies and gentlemen, please welcome for the next 20 minutes, Ivan Poon on the screen.
All right. Yep. So hi everyone. I'm the co-founder of Switch.io. We are a decentralized exchange platform. Been in this space for about three or so years. So it's really great to be part of IBW this year, even though it's like a virtual event and everything. So today my talk is going to be mainly about DEXs and in the theme of DEXs versus traditional crypto exchanges. It won't be very advanced or extremely technical. Mainly we'll just look at the recent developments in the DEX space and also the wider DeFi ecosystem. Along the way, of course, I will share a bit about what kind of technology Switch.io is working on and what Switch.io's part in all of this is. So a brief primer before we begin for the newer people in the audience. What exactly is a DEX? So there are many aspects to decentralization. I think just now Kuiper talked about it a little. I guess for me, the most defining point for DEXs is there's non-custodial. This means that the user's funds are all controlled by smart contracts. Smart contracts are just programs on the blockchain. And the tokens and the collateral is all still within the user's custody. So a traditional exchange will have you depositing or transferring your tokens to the exchange wallet, whereas a DEX will you either trade directly on the smart contract or you sort of lock up your funds through an escrow program. There's also various architectures and most of it involves the matching engine, how whether it's hybrid, whether it's fully on-chain or maybe even layer 2 DEX like Loopring. How you trade also is a bit different. Recently there are new DEXs that don't have order books, such as Uniswap, Kyber, etc. As a user, that's not the. I don't think it's very important what kind of architecture is being used. The main thing is that as a user, as long as the UX is good enough for you to know what you're doing, that is the most important thing. So that's basically it. There are varying degrees of differences between all the DEXs and these attributes. To really go through to really explain everything, it's way too in depth for a 20-minute talk. But I think if you're a viewer and you're interested, there's definitely a lot to explore there. So let's quickly move on to the main topic. In 2020, DeFi and DEXs have seen like crazy kind of growing interest. I think today it's almost 7 billion in terms of lock value. Sorry, technical issue. Just give me a second while I regain control of my mouse. So sorry about that.
All right, never mind. Evan?
Yeah. All right, I'll share my screen again. All right. Yeah. So almost 7 billion locked in DeFi smart contracts, and the highest trading volume this month actually. So what makes them so attractive? So the key differences in DEXs are like they're really very simple to use in terms of being able to trade on directly through your wallet. You don't need the KYC when you sign up for an account. It's actually really enticing as a retail user. You just got your first Ether on, say, MetaMask. You go to the DLAT page and then you can immediately trade for whatever token you want, buy the latest, hottest token. So the permissionless aspect and also the composability aspect. So right now in the DeFi space, smart contracts being interoperable, it's one of the key things that actually are growing the ecosystem. So what this means is that you can have a token, say a compound token, you can lend it out, you can wrap it in an interest-bearing format. And this has actually really unlocked Pandora's box in terms of what developers and what users can actually do with it. So the other thing, of course, is being able to construct any kind of market. What this means is that by simply providing liquidity into, say, a pool, immediately any sort of token can be listed. Whereas previously in a centralized space, you have to basically negotiate with the exchange in terms of getting your token listed. So initial liquidity pool offerings, ILPOs, now are actually very hot, so to speak. So it isn't just all this. I guess the other thing that's hyped right now, very popular, and it's all over the news. It's yield farming in DeFi, and it seems like everything is all about yield. But where does it actually come from? So I think it bears some deeper look at, especially when the traditional space is stuck in like zero or negative interest environments. So here you can see that most of the interest is from trading. So let's say if you are looking at Curve-Fi, they do say a couple million volume every day, and this and basically the protocol fees or the spread from users trading against the pool go to the liquidity providers, and it gives like a couple of % in terms of APR. But recently, we've been seeing that there are a lot of that's new movement where these protocols kind of issues governance tokens, and these are rewarded to liquidity providers in addition to the trading fee. And this actually really gives extremely high yield and pretty easy gains. And that's what's known as yield farming. So you can see at the bottom, SNX, Synthetix, RAN Protocol, Balancer, Curve-Fi. These are all governance tokens that are being issued on top of the base APR. So this has led to some sort of like a cycle where once there's new governance tokens, liquidity providers try to get more of these tokens by contributing more liquidity. And with more liquidity, there's less slippage, more traders are will be more basically they would use the platform more, because as opposed to say Binance, the slippage on say Curve-Fi could be way lower. As trading volume picks up, kind of the token value goes up, and then it leads to more demand for the governance tokens. So is this governance token actually useful, and is the value measured correctly? I think that needs to be looked at closely by anyone who's investing in this space. So for governance token itself, basically if you control governance of a protocol, you basically control the value flow. You control the where the profits go, so to speak. And however, certain valuations might not make sense in regards to how much value is actually transacted on each protocol. So whether this sort of growth is sustainable, I think we are still in the very early stages and still very experimental, and yeah, that's why I think it's to be determined. So is DeFi the next big thing? Yeah, it does seem like that the growth is like almost unstoppable. However, we have already been seeing the cracking points in DeFi currently, or in DEX trading in general. We have seen gas costs on the Ethereum network skyrocket in recent times, and that's something to be concerned about. So right now it's actually extremely expensive and difficult for any normal user to interact with decentralized applications on Ethereum, and the concerning thing is that all the DeFi basically any decentralized protocol is based on Ethereum mainly. So it's a very big blocker for new users who are trying to enter the space to actually participate in such activity. So the thing is that the Ethereum blockchain has a limit in terms of transactions per second, at least until Ethereum 2 is launched, and that's like I think it's less than 20 transactions per second. And even on our own exchange, we have seen each trade taking up $20-$30 per transaction. So this is even after batching and heavily optimizing our smart contracts. Furthermore, the block time on Ethereum is about 15 to say 30 seconds, and that means that solutions such as off-chain order matching or basically trying to centralize the various components of the trading is kind of necessary. So this goes back to what Switcher is doing, and how we are actually trying to scale the whole decentralized trading and decentralized finance. So over the past year, we've been building Switcher Trade Hub. This is a layer 2 decentralized order matching engine. So it's a sidechain that actually works in parallel with layer 1 blockchains like Ethereum, Neo, Bitcoin, etc. We built this on the Cosmos SDK, and it's powered by the Tendermint consensus algorithm. The block times are only 1 to 2 seconds, and that lets us basically do all our trading on-chain in a very transparent manner. So because it's operated on the sidechain, basically you can do many trades with almost zero fees. So this is ran by, so basically the sidechain nodes are ran by many validators and organizations that are well known. And we use a deposit and withdrawal flow similar to a centralized exchange, but you actually transfer your tokens into an escrow or a deposit smart contract rather than the exchange wallet. So this, by actually moving our trades to the sidechain, this actually allows for a true sort of decentralized ecosystem, and a full, basically 100% decentralized trading experience. So let's take a look at Switcher Trade Hub a little bit more. We call it a cross-chain DeFi protocol, and I'm going to be on this slide for a while. because it's pretty massive and dig into each point. So on Switcho Trade Hub, we actually we have invested a lot of time into building two things. One is the liquidity protocol, or basically a native liquidity pool plus automated market maker, basically building Uniswap into our sidechain. And we have also invested a lot of time into allowing the sidechain to understand derivatives and basically different types of markets. So once we roll out everything, users will basically be able to trade, or basically be able to create any sort of market, whether it's a binary option market, whether it's a perpetual market that is tracking any type of underlying. It could be indexes, it could be gold, it could be just Bitcoin. So going more into the liquidity protocol, what we are doing is combining Uniswap with order book with an order book exchange. So what this means is that users don't actually trade against a automated market maker only, but they actually get the best of both worlds. So how we do it is basically to simulate the liquidity in the liquidity pools and show it on the order book. So to a user, it's transparent. It's a black box basically, and all they see is what they need to know, which is what are the prices at each level. And we've actually already done this on our current exchange. So if you go to Switcho right now, we are actually connected to Kyber, Uniswap, and other liquidity pools. So what happens is that when you make a trade, if the liquidity on the order books is insufficient, it's routed into Uniswap or Kyber. So by bringing the liquidity protocol into Switcho Trade Hub, basically we'll be able to allow for permissionless listing. So this is the next thing that will really truly define being decentralized. And taking a book from the yield farming in DeFi right now, staking, we started Switcho Trade Hub's mainnet with a pretty high inflation rate. So this means that if you actually buy Switcho and stake it right now, the APR annualized returns is like almost 100%. Of course, this will decrease pretty rapidly, and the idea is really to bootstrap the network, get people to participate in the staking system. And when we scale out and start running trades through Trade Hub, the network fee will hopefully balance out the price of the token, as I mentioned earlier, in terms of being able, in terms of the token, in terms of having a fair token value. So the other thing that we are actually going to do with Switcho Trade Hub, which we haven't actually announced or said publicly, I think it's that we're going to start delegating some of the block rewards and trading fees to liquidity providers once our AMM module is launched. And hopefully we'll pool a lot of the liquidity on the layer 1 blockchains into our layer 2 liquidity protocol. So I think the ratio that we're looking at is maybe from 50-50 at the start, and then decreasing to say 20% to the liquidity providers at the end of the year. Yeah, so I think that's basically the overview of Switcho Trade Hub. To find out more, I think you guys can head over to our blog. There's a lot of information on what we've been doing at Switcho. So how is this whole Trade Hub being used? Right now, we've been running a decentralized spot exchange for over 2.5 to almost 3 years, I think. And over the next few weeks, this trading, which basically takes $20 or so per trade because of the high gas fees on Ethereum, will be transited onto Citro Trade Hub. And I think if you're a user of Citro or you're a trader, the experience will be mind-blowing, yes. So the other thing that we're launching really soon is DMAX. So this is branded and really angled to be a direct competitor to decentralized derivative exchanges, BitMEX, Deribit, etc. It's also going to use the same engine, the same token as Citro Trade Hub. And it's going to be completely non-custodial. We're going to launch with derivatives that include perpetuals and vanilla futures. In future versions, we'll move on to binary options, and prediction markets. So the experience of using DMAX will be pretty similar to what you get on, I think, FTX or Deribit. We support isolated margin and leverage trading up to depending on how the market is created. At the start, we're going to do USD settlement, and later on, we'll move on to physical settlement as well. Yeah, so this is something that would be great to watch out for. So I think I'm going to wrap up soon, and I just want to drop a mention here that at Citro we work in a very collaborative manner, and I think in general the DeFi ecosystem is also very collaborative, where we build upon each other and rather than compete directly with each other. So recently we've been working with Zilliqa to bring DeFi onto Zilliqa as well. We've been working with Neo and their Poly network to enable cross-chain sort of transactions and cross-chain, basically bridging the different blockchains together. So on top of that, of course, we have integrated with Kyber and Uniswap to use their liquidity pools on our Citro smart contracts. So we always want to look out for more projects, more blockchains to work together with us. So if what we have talked about today, or what I've talked about today is interesting, do feel free to reach out to us. Yep, that's all for today. And so I think there'll be a panel later on, and if there's any questions, you can throw them to me then.
Yes, sure thing. Ivan, please stay. We are going to entering the panel discussion for tonight. By the way, thank you for sharing. Yep. Okay, but before we're going to start our panel discussion, I'm going to invite the other panelists for tonight. Bapak Ibu sekalian, sekarang kita akan memasuki panel diskusi untuk Bapak Ibu sekalian dan juga para peserta webinar. Silakan untuk Anda yang memiliki pertanyaan, tulis pertanyaan Anda di kolom komentar. Nanti kami akan kurasi dan pilih pertanyaan untuk diajukan langsung kepada para panelis kita di kesempatan malam hari ini. On our panelists for tonight, besides Dennis and also Ivan, I would like to invite Bapak Teguh Kurniawan Harmanda, atau kita kenal sebagai Bapak Manda. Selamat malam Pak Manda, dari Toko Kripto. Bapak Teguh Kurniawan Harmanda has been serving as COO of Toko Kripto since January 2018, and also a key contributor to formulation of laws and regulations related to crypto assets in Indonesia for Commodity Futures Trading Regulatory Agency or BAPEPTI. Selamat malam Pak Manda.
Good night. Selamat malam Pak Nel.
Good night. Ketemu lagi. Baik, apa kabar?
Thank you. Nice to meet you.
Okay, nice to meet you too, Pak Manda. Besides Pak Manda, I would like to invite also the other panelists for tonight. We are going to meet with Bapak Budi Raharjo dari Institut Teknologi Bandung. Bapak Budi Raharjo is a serial technopreneur, started technology companies, include Reset.ai, an artificial intelligence research company, Instant Music Store, and these days he mentors many startups in various fields such as technology, fashion, and also food. and he is one of lecturer at Institut Teknologi Bandung or ITB in School of Electrical Engineering and Informatics atau Sekolah Teknik Elektro dan juga Informatika, teach mainly in information security. Do we have Pak Budi in here? Halo, selamat malam Pak Budi.
Selamat malam semuanya.
Hey, selamat malam Pak Budi. Satu fakta yang menarik Pak Budi ini and also is a rocker ya.
Wah.
Wow, we have rocker in here. Huh?
Baru selesai bermusik.
Oke, baru selesai bermusik ya. Alright, then. Selain itu, kita juga malam hari ini, tonight we also have Michael Burgess from RAN Protocol as COO. Good evening, Michael. Do we have Michael is on the call for tonight? Hi, Michael.
Can you guys see me? Hey there.
All right.
How is everyone?
Yes.
Pleasure to meet. Happy to be here. Thank you.
Pleasure to meet you here also. And special for tonight, this panel discussion will be led by Jin Chao from Binance. Jin Chao currently serves as strategy officer for Binance, where he leads the corporate development department, which covers M&A, JV, and also strategic partnerships, Binance Labs, venture investments, Binance Launchpad, advisory services, and Binance X developer platform. He previously spent 10 years in Asia working for NBA and Dell in senior corporate development roles. Prior to that, he worked for 15 years in the US at Sovereign's investment company leading acquisitions, Deutsche Bank's investment banking group, raising over $2 billion in capital for Web 1.0 companies, and Price Waterhouse Management Consulting Division. He receives a BS in Mechanical Engineering from Carnegie Mellon University and an MBA in Finance from New York University Stern School of Business. Good evening, Jin Chao.
Hi. Thanks for having me.
All right, then. This panel discussion will be led by Jin Chao. So, ladies and gentlemen, please welcome our panel discussion for tonight. And Jin Chao, the floor is yours.
Thank you very much. And thanks to our hosts at Toko Crypto for putting this panelist together. We've got a great group here. The topic here is really focusing on decentralized exchanges. And so I'm just going to sort of dive right into it. First and foremost, centralized exchanges versus decentralized exchanges. What are the pros and cons for each? And I think, to sort of kick us off on some thoughts, why don't we go to Budi and Manda, who I think are both have strong perspectives on decentralized. Budi does, and then Manda on obviously centralized exchanges, which of course myself at Binance has strong experience with as well. But yeah, Budi, do you want to start us off? Strengths and weaknesses, pros and cons.
Okay, let's start with centralized versus decentralized. In my opinion, this is basically a technological thing. We have the mainframe centralized, we have web decentralized, we have servers decentralized, and then now we have web services centralized and an application decentralized. So it's going to swing. It's a pendulum thing. And now these days we are more into decentralized because we have the technologies. I think, but that's one thing, the technology. And the other thing is for decentralized system is that we kind of do not trust one entity. So if you don't touch one entity, one big entity, then decentralized is a good thing from technological or philosophical point of view. In the old days, we don't have the technologies because computing power was very slow. We don't know the blockchain technologies yet, although distributed technologies are there, but we didn't know how to do it. Because of blockchain, it is now possible to do decentralized things properly. So I think decentralized is the future, at least for the next 5 to 10 years.
Okay, so I think you're alluding then to really solves a lot of governance issues, and obviously sticking with the crypto ethos of being trustless That's something now that decentralized exchanges can offer.
Right.
Let's hear the counterpoint. Manda, how about you? Pros and cons for each.
Yes, thanks, Jin. Yeah, so I want to talk about the centralized exchange process, or how Toko Crypto works. So basically, have some benefit if you trade or you want to transaction in the centralized exchange. I mean, we can't directly 100% going to decentralized. Because if we want to go to massive adoption, we need to do like a hybrid system. Okay, for example, what the benefit if you guys trade in the centralized exchange? The first, you can deposit fiat money through your bank account, and then these things you can do in the decentralized exchange, right? And then the second, you can doing easy step, or I mean you easily to use the exchange. So many steps you can simplify in the centralized compare with the decentralized. And then another thing is about the high frequency trading. I believe if we compare centralized and decentralized, centralized exchange is much higher frequency trading compared with the decentralized. And then another thing, and yeah, I think this is important about the trading of token. In centralized, you can trading various blockchain protocol, right? But if you want to trade in the centralized, you just trade in the maybe like a specific blockchain protocol, right? So that's why I think and believe centralized exchange still have a good position compared in the centralized exchange. Yeah, that's my answer.
Good point. So I think you're pointing out specifically there's a user experience part of this.
Exactly.
That's a little bit more easier for people to hold people's hand through the process. And the second that you pointed out is on the performance side, on trade execution. So would love to actually get Ivan's thoughts on this, obviously from Switch.io as an operator of a decentralized exchange. How do you address some of these points from Manda?
Yeah, so I think those problems are there now. But we've been seeing a lot of upcoming experiments and projects that are actually tackling these exact problems. So for example, at Switch.io, we are building a cross-chain. We already have cross-chain trading, although it's through atomic swaps because that was what was understood previously, very well understood. But now with new developments, we are able to build a cross-chain protocol that trades exactly like a centralized exchange. And other players in the field are also doing exactly the same thing. I believe FTX Project Serum is a very adventurous experiment in terms of building a trading engine on Solana, I believe, and that has sub-second sort of block times, and that can actually commit and settle trades within a second. Pretty similar to what we're doing at Switch.io TradeHub. So I think it's not an immediate thing, but I think eventually decentralized exchanges will get to a stage where it's really, really close to centralized exchanges in terms of the performance, the technology, and also the user experience. Yeah.
Okay, great. And speaking of protocols, so we'd be remiss if we didn't ask Michael to talk a little about DEX protocols. What is the timing here where we start seeing the type of performance that we can find in centralized exchanges on the decentralized architecture?
Yeah, I really think kind of by the end of Q4 2020, we'll see some good advancements, and Dennis will be able to speak to this a bit more, I'm sure. But by 2021, I think all the issues that were outlined will indeed be solved. I mean, we're working on one of the core issues, which is interoperability. So bringing cross-chain assets to actually function on any decentralized exchange, regardless of where it's built. So whether it's on Ethereum or Polkadot or some other layer one. So that's always been a huge hurdle, and we're doing quite well with regards to a solution on that. But all the others, I think, will indeed be solved. But I would agree with Booty's statement, it's really on a spectrum. We have some centralized exchanges that take some, some benefits from decentralized exchanges, and they're kind of in the middle of the spectrum, and vice versa. So I really do think there are advantages to both. With a centralized exchange, you can do the fiat on-ramp depending on the jurisdiction you're in. They can move much faster than decentralized exchanges. But at the kind of on the other spectrum, decentralized exchanges can source liquidity, I think, much easier. They can source it from the public, in fact, versus kind of a centralized, with market making and so on, that centralized exchanges have to deal with. So, yeah, I mean, there really are pros and cons to each. And I think we'll see a variation of those as both ecosystems mature.
Okay, great, thanks. We'll touch on trading liquidity in a moment. But next question I'd like to raise, and maybe Dennis, you can kick us off on this, is really around data integrity, which is a debated topic on centralized exchanges. The ease or perhaps difficulty of data manipulation on DEX versus centralized. Dennis, do you want to tackle that first? And then maybe we'll shift back to Michael to get your thoughts.
Sure. I mean, in the conventional financial world, we know about all those high frequency trading black boxes, right? So people who use like these systems, the stakeholders, they don't know if they're getting a fair cut. I don't like, there's a bit of a veil there. Whereas now we have the advantage of this blockchain technology, at least in this first round, being incredibly transparent and verifiable. And that's pretty much why you can also do settlement as well as just matching the price, the execution. So yeah, I mean, it touches on the previous question about pros and cons as well. I mean, this data integrity is a bit of a disadvantage for centralized exchanges, but it does offer speed. But I think the decentralized part, the cons, they are getting smaller and smaller, and it's catching up pretty fast while still retaining that self-custody and not having to wait block time for confirmation and the KYC. Well, it still retains that. And it is like such a viable option out there, which gradually I see a higher percentage of people coming into the space and growing the pie compared to centralized exchanges, but they still have a huge growth area as well. We're still at such early stages of adoption that both centralized exchanges and decentralized exchanges are going to grow incredibly individually anyway.
Yeah. Do you agree with Michael's assessment on the timing that over the next couple of quarters, we'll see a lot of the kind of roadblocks solved?
I mean, that's optimistic, but I'm happy Michael is, like feeling like that because he has such good vision in this space as well. Like from my experience, everything takes much, much longer than usual. But if not a few quarters after that, I think it's inevitable. I mean, especially with so many experiments playing out, all of you guys doing your own thing. Some of them aren't going to work out out of the hundreds, but many of them are viable and are going to come forward and, close that gap with what's existing right now.
Okay, great. Yeah, why don't we pivot quickly back to Michael, your thoughts on the data integrity issue between centralized and decentralized exchanges? And
yeah, I mean, yeah, of course. It's really, I mean, centralized exchanges, they retain all consumer data, right? So it's a honeypot in a way, and it's a much kind of larger attack surface, right? So there's an incentive to go in there and kind of find loopholes and get any data that the individual might want, right? Decentralized exchanges, kind of each person retains their own data, so the attack surface is much lower, and it's kind of much harder to get a large set of data in kind of an easy way. So I think it's actually much more difficult to kind of attack decentralized exchanges. But at the same time, I mean, there's all these smart contract risks. And we've seen hacks kind of on both sides, centralized and decentralized. So it's again kind of on a spectrum, right? But yeah, they each have their own advantages, I'd say.
Yeah, sure. Anyone else like to chime in, Booty?
Yeah.
Yes, please.
Basically, integrity is actually one of the biggest things of blockchain. Because essentially blockchain has built-in integrity by structuring all the transaction, the hash and things like that, right? So integrity is kind of within the protocol itself. That's one thing. The other thing is, as Michael mentioned, that all the data are distributed in several places. Everybody basically has the data. So if you want to change something, the integrity of the data, then you have to change everything, or at least 50% data. So it is difficult to actually change the data. So the integrity is actually one of the biggest or godsend kind of aspect of blockchain, and that's built into the DEX. So DEX is the biggest thing of DEX is the integrity is kind of more guaranteed compared to the centralized, which is owned by one entity, and they can manipulate if they want, or if somebody manipulate that, then that's it, single point of failure.
Yeah, and coming from a centralized exchange, well, Binance operates both a decentralized and centralized, but certainly on the centralized, we do invest quite a bit of money on security, and we are always dealing with hack attempts. And like Michael pointed out, there's a giant bounty for successful hackers in this space. So I guess, Manda, you're sort of in the centralized exchange boat. How do you address some of these security issues or potential security issues? Oh, are you on? You might be on mute, Manda.
Sorry. Yes, thanks, Jun, for the question. Yeah, I don't want to comment too much, but then clearly, I believe quite many unregulated exchanges, they do like wash trading, right? Say now Toko Crypto, we are the first crypto exchange regulated by Indonesia government. So we are under Bapepti. Bapepti is a big organization in Indonesia. They are monitoring and controlling the transaction about the spot market and etc. Right? So we need to update, and then we need to do like a daily report, monthly report, and yearly report to Bapepti, and then we do like a list of our user transaction. But again, this is not this is not a clear identity. But some of information we need to hide before we send the report to government, right? So the purpose is we want to avoid an unethical practice. So if Toko Crypto still unregulated, I think we easily we do whatever we want. But then now Toko Crypto, we are regulated, and then we just follow the regulation, and then we do like a customer protection. So that's why we can avoid an unethical practice. That's my answer.
Yeah, and fair enough. I think to address the point that was raised earlier on the trust versus trustless, I think being in a regulated environment, that does give certain users some kind of comfort, and they feel that they're somehow protected, whereas perhaps some folks think actually the opposite, that they already don't have the trust in a regulatory environment, and therefore a DEX is a solution. In the current environment right now, we talk about trade liquidity. Clearly, the volumes favor centralized exchanges. So I'll maybe address this over to back to Ivan, running decentralized exchanges. When do you see a pivot, or when do you see sort of that adoption in decentralized exchanges happening? So we feel like, I've heard over the next 2 to 4 to 6 quarters, a lot of the technological barriers could be addressed. What about then the actual business adoption or the user adoption for decentralized exchanges? Do you have thoughts on that, Ivan?
Right. So I think decentralized exchanges actually have one of a strong advantage in the sense of being able to allow the retail user to easily contribute to liquidity, and I think that's what's been driving a lot of the growth in 2020, at least with Uniswap and the new lending protocols. So I do think that eventually, or maybe quite soon, in fact, a lot of decentralized exchanges will have liquidity that matches or even exceeds centralized exchanges. In fact, for stablecoin swaps, that's almost the case already, in the sense that Curve5 with their unique bonding curve can do USD to USD, say USDC to USDT with almost zero slippage, even better than what you can find on centralized exchanges. I think what will really make it grow, though, it's more research into different types of bonding curves, or how to basically improve the efficiency of the liquidity that's in the pool. Because truth be told, the constant product formula, it's not very efficient in terms of using the liquidity. Whereas a normal market maker can put all orders within a very tight price range and allow for large trades at a good with low slippage. The current bonding models that's being used, it spread out liquidity into price ranges that basically are never touched. So yeah, when you generate a sort of order book out of it, it's very obvious that most of the liquidity actually it's just sitting there. So if that can be improved, I think it will be it will be a leap, basically a leapfrogging effect, where DEXs will catch up very quickly to centralized exchanges.
Interesting. Dennis, what do you think on that sort of, I guess, execution gap? Perhaps is what Ivan's alluding to. Do DEXs catch up there in a relatively short period, or will that take a little bit of time?
I mean, I think it's more likely to be faster than we think rather than slower, because normal exchanges have been around for decades, and let's say in crypto they've been around for 6-7 years. But now that you have smart contract platforms, you can get far more creative with the incentive design, the mechanism, and you can come up with creative ways to bring that liquidity. And I mean, yield farming is kind of, I don't know, like a symptom, like a signal of that. I'm not saying it's good or bad. It's just something that 12 months ago really didn't exist, but somehow it is bringing in a lot of liquidity. It's shown how easy it is to scale up when you have some kind of incentive mechanism where the stakeholders believe there is value in it, even if it's unproven. But I think it's just going to keep on accelerating as more DeFi projects come into the space and experiment more with new incentive mechanisms. Before we know it, I think DEXs will catch up in terms of liquidity. I mean, already some of them have more daily volumes than centralized exchanges with pretty competitive slippage. So I think the first signals that that's where we're heading are, like, we've seen it in 2020 and 2019.
Yeah, okay. Yeah, DeFi is a very hot topic right now. Michael, how do you think that this ties into decentralized exchanges? Will this help drive liquidity and volume to decentralized exchanges, or do they go hand in hand, or will they be sort of separate tracks?
Yeah, so I would just echo what Ivan and Dennis said. I mean, absolutely, we've seen, even over the last few weeks, decentralized exchanges, they've been spun up and then have $100 million worth of liquidity, literally within a couple of weeks. So I think it is moving very fast and will continue to do so. And I think that the real advancement there is the automated market making system versus regular order books. I think that really is going to have a profound impact on DeFi and its ability to retain liquidity over a long period of time. And at the end of the day, it just provides liquidity providers yield for doing so, and that's an extremely powerful incentive. And we've seen it play out here, just this summer in a really profound way. So that will continue. Now back to your question, could you clarify a little bit? You mentioned DeFi and kind of decentralized exchanges and the their progression. I mean, I kind of see them all in one, if you will. But yeah, could you clarify that a little more, Jin?
Yeah, I guess that was my question. Do you see it as all in one, and are they going hand in hand, or do you feel that this is sort of DeFi products right now may not necessarily translate into greater adoption, user adoption on decentralized exchanges. But I think what you're saying is that you feel they go hand in hand.
Yeah, absolutely. Like the lending markets, I mean, we're seeing huge strides in those again over just the last couple of weeks. We'll start to see kind of bonds and other financial instruments moving into DeFi, and I think that's going to be huge. So yeah, they will move in unison, in my opinion.
Okay, great. Mando, would love to get your opinion from a centralized exchange standpoint. How do you feel with some of the gains that decentralized exchanges are experiencing, and especially in the middle of this DeFi trend? How do centralized exchanges compete, I guess, if you will, on liquidity?
Yeah, so I think for the centralized exchange, right now we explore more about the cloud solution. So I don't want to discuss more deep about the DeFi, but then let me explain about how Toko Crypto we explore about the cloud solution. So meaning like between centralized exchange, we can exchange, share liquidity across each other, right? And then I think this is like a good and strong advantage for liquidity right now. So I think this is important to make people they are try to trade. I specific in Indonesia. Not many people in Indonesia, they know about the crypto trading, and then how they start to do like register in the exchange, right? So that's why we need to exchange that have a big liquidity. So that's why they are confident to trading, and then they are spread the information to the people. If the exchange, if the centralized exchange have liquid and good trading, the experience. So I think this is important to deliver the early adopter to them can trade and start trading in the central exchange. So the solution right now about the liquidity for the trading, we want to explore about the cloud solution, of course, with the Binance Cloud.
Yeah. Well, thank you for that plug. Sure, and I think that's something that a lot of people can understand, given that the cloud's relatively mature service. And speaking of maturity, we all, I think, understand this panel that the whole industry is still quite immature. The entire market cap of crypto is a fraction of Apple's market cap. Global adoption is still under 1%. Active trading is even less than that. So the whole industry is still quite immature. And as far as DEX maturity goes specifically, it relies, again, we've touched on this early on, but a couple of technological barriers in the past, and now would like to explore a little bit more about what those things are that would keep decentralized exchanges from realizing their full potential. So while we are solving a number of those issues over the next few quarters and even year or so, what are some that you guys see as real long-term challenges before decentralized exchanges can kind of realize their absolute potential? So what we're talking about in a perfect world, what needs to be overcome to get there? And I'll start, Budi, with you.
Okay. In my opinion, DEXs are back end, so you will never see DEXs in the front end. So what DEX, what's needed is or are killer applications. We will see killer application that utilize all these DEX. So you need killer applications. A while back, I still remember in 1992 or 93, I can't remember. Well, that was the early World Wide Web. I was working with World Wide Web with Next Computers and Tim Berners-Lee. At that time, we thought, I thought World Wide Web was the great thing. I tried to promote World Wide Web, and people just could not believe at that time. I said the World Wide Web is the future, and people did not believe. until the killer application at that time was Mosaic, because we had a multi-platform application and people will embrace, like World Wide Web right away. Now, I can see that there are killer applications for decentralized application and decentralized currency, because in my opinion, transactions are locals. You can have the system, but transactions are local. In Indonesia, all transactions are going to be mini, not micro, but mini, micro, probably nano or pico transactions. For example, I'm exchanging stuff for 1,000 rupiah, which is, a point something cent. And there's nothing, there's no payment system that can handle transaction that I need right now, because it's very, very small. So we need some kind of a transaction system that can do that. Now, DEXs, if you have one big thing, it would just, would not handle that one. So you need smaller DEXs, which are locals, and they have to communicate with each other. I can see there are going to be lots of DEXs, and they communicate with each other, but you have an application on top of it, the killer application, which is, in my opinion, is micro or pico or nano or pico transactions, which are going to be used in, worldwide, in Africa, in China, Indonesia, on all those countries that, the numbers are very small, the number of transactions, the value of transactions is very small, but you have lots of them. That's, in my opinion, that DEXs are going to be there as the backbone of transaction. On top of that, probably less than 5 years.
Interesting. Ivan, what do you think of that thesis that we're waiting for that killer app, and that killer app maybe microtransactions? Ivan, your thoughts on that?
Yeah, I do agree with the point that as for DeFi or for DEXs specifically, at the end of the day, you still need the tokens to be traded, or the underlying, right? And I'm not sure if that's going to be a microtransaction sort of a thing, but yeah, I do think that at the end of the day, we need besides just trading, we need other sorts of decentralized applications to be built on the blockchain. Yeah, so further to that though, I think there are other problems that specific to DEX, at least, because that's my expertise, that we have not seen yet, but because we are going full cycle back to become very similar to a centralized exchange, where we are putting stuff back on chain, we're putting all the books back on chain. We come to the issue where because everything is so transparent, we actually cannot shield users' transactions, and then you run to this problem where you actually cannot do iceberg orders, you cannot do hidden orders, and basically every user's order flow it's public information. And for now, we don't really care about that, but I do foresee that will be the next thing that DEXs will start having to tackle. How do you actually shield users data, basically? And I think RAND protocol actually initially was before they pivoted, there was the idea of dark pools, and I do think that technology will come back to be very important in the near future. Yeah.
Okay, great, thanks, Michael. I think I saw you nodding, so I'm guessing you've got some thoughts on this. What do you think of the issue around the transparency being an issue, and then what are some other technological barriers for DEX to meet its full potential, particularly from a user adoption standpoint?
Yeah, so essentially three kind of bigger barriers in my opinion. So there's privacy, which Ivan just mentioned. And then there's this kind of jurisdictional requirements and regulatory requirements with regards to getting fiat into crypto. I mean, that's huge, and centralized exchanges win currently there. And then there was a third one. What was it? Oh yeah, scaling. Yeah, Ethereum. Yeah, if you're in DeFi, over the last couple months, you'll understand what I'm saying. I mean, the gas fees for just making a simple trade are literally outrageous. So that needs to be dealt with pretty quickly. But I'll touch on those two in a bit. As for privacy, yeah, so kind of our first mandate back in late 2017, early 2018 was creating the first decentralized dark pool. So that's actually hiding the order book and hiding the orders so they can't be front run, and there's privacy maintained for those organizations that want to do so. And that's very much still a need. And I think we will see some advancements there. I mean, we actually, we ended up creating, the Stark pool. So from a technology standpoint, it's definitely possible. It's just kind of, it's kind of creating a holistic system in which you can retain liquidity, but also privacy at the same time. That's the tricky part. And yeah, as for scaling, we need some solution there. Hopefully ETH 2.0 comes out pretty quickly, or some other layer one will solve that essentially. But paying $20 for a $10 trade in fees is insane, and no normal person, at least in the retail world, would want to do that. So that's a pretty big challenge. And then lastly is kind of the regulatory piece, right? Is how does this exchange that has no jurisdictional kind of, flag in the ground work with regulators in a way that they're happy and can get the information they need, but also, maintain the trustless aspect and the no KYC aspect that the DEXs do currently. And I think they're all solvable, and it'll be, again, on that spectrum. There'll be some DEXs that give user data to the nation states that require it, and require KYC as a result, and they'll have that advantage, and some others won't. So it'll be a spectrum there. But anyways, yeah, those are the three big challenges that I see. And back to my very first point, I do agree. I was a little optimistic on the timeline. I think it'll be solved kind of in a isolated way, but a holistic system that has all these benefits will take quite some time. Maybe 2022. But yeah, I'll leave it at that. Thanks, guys.
All right, got it. So we have a little bit of an adjustment now on timing. Dennis, how about you? There's a few issues there that Michael just mentioned. I'm guessing those were some of the things you were thinking about when you thought about some of the things that need to be overcome earlier. How about you? Is there a specific technological barrier that you see of all the things that have been mentioned so far, or anything else that has not been mentioned?
I mean, on a practical level, for us scaling, we thought we had a few more years before this was an issue, but suddenly it's like and transaction costs have gone from 10 cents to $10, and I'm thinking, okay, now we're pricing out the people that we did want to cater for, like microtransactions. It's a beautiful thing. We had this concept of streaming money that came out 6 months ago, but at this price, I mean, it costs more gas fees, and it doesn't really make it worth it, except for people who already have huge sums of money and don't mind paying the $10, $20, $30 or whatever it costs. So yeah, like the scaling thing is keeping us up at night as well, because there is no obvious kind of exit we can take. We have ETH 2.0, which I don't think we're going to be able to deploy and operate as we are now within the next 2.5, 3 years at least. And layer 2 breaks composability. Like, it's amazing that you can fit like that thing we call money Legos. Get Kyber for its token exchange, get something else for lending and borrowing, put insurance on top of that, and you're building different services. But if everyone's going to go to their own layer 2, which is like the trend now, then we kind of break that as well. It's almost like, well, it's, I don't know. There's no easy answer to that, but that's something that's high on our priority list as well. We're looking at layer 2 solutions as well, see what's viable and how we're going to get out of this like kind of bottleneck that we're seeing on Ethereum right now, which, not every blockchain has that same issue.
All right, thank you. Yeah, I think you point out to both sort of a prisoner's dilemma issue to some extent with all the players in the space, and then also, as you mentioned, with the gas prices really kind of affecting the overall business model. So those do need to be solved. We'll go to questions in a minute, but I think, Manda, I'll let you have the last word since this is a Toko Crypto conference. What do you think? Let's assume all these things get solved. How do centralized exchanges stay competitive or coexist with DEXs long term? We'll have you answer that, and then we'll go to questions.
Okay, thanks, Jim. Actually, with a country like Indonesia, highly regulated, we think a centralized exchange that's still monitored by government still have a good position compared with DEX, right? I mean, in the another side, we also believe fiat on off ramp is always required for the people the first time they are trade in the crypto, and then they can directly feel the benefit of trading in the crypto, directly change to the fiat money, right? So if we can compare with DEX, DEX cannot support this direct fiat on ramp, right? So I think centralized has an advantage for people can directly trade from fiat money, and then they can buy whatever crypto they can buy in Indonesia, especially. So I think this is one of the point that centralized exchange can competitive with the decentralized exchange. That's my answer.
Got it. Great. Thank you. Okay, we'll have a few questions here from the audience. I'll start with perhaps the easiest one, or it sounds the easiest, but it may actually be the most difficult question. How many decentralized exchanges are out there? Does anyone have a number around that?
I mean,
I thought you guys bought CoinMarketCap. You should know.
I mean, for example, on Ethereum, there's maybe a dozen that have over $1 million in trading every day. And then maybe there's another 30, 40 more exchanges that have at least 10,000, well, 5 to 10,000 per day at least. Just rough numbers for Ethereum.
Okay. All right. Hopefully, to Martin, who asked that question, hopefully that helps. And then I guess this is a good follow-up question, and specifically to Ivan, what makes Switcheo different than other DEXs, and why should folks be looking at Switcheo instead?
So I think at Switcheo, we are one of the few DEXs out there that actually still maintain the order book model, and I think that's hugely advantageous for more advanced traders who are not just going to market buy against a liquidity pool. And the order book model, as I mentioned somewhat previously, it allows market makers to actually use their liquidity very efficiently at the correct price points rather than spread throughout the whole all the levels on order book. So that's one of the main distinguishing features that Switcheo still has. And on top of that, because it's still a smart contract based DEX, at the end of the day, we are able to combine orders from layer 1 liquidity pools like Kyber and Uniswap. So when there's not enough liquidity on our exchange, we actually use those liquidity pools as a liquidity backstop, basically. Yeah. So I think that's to really see in action, you just got to try it out. Our user experience is also, I would say, one of the best in the space. It's really similar to how you trade on centralized exchanges. There's no confusion in terms of like understanding how slippages works or DMMs and things like that. Yeah.
Okay, great. Another question, a couple of you guys have mentioned Ethereum 2.0. The question here is that most DEXs use Ethereum. With the arrival of Ethereum 2.0, will the existing system be compatible with Ethereum 2.0? So I guess maybe, any areas of incompatibility, maybe is that an easier question to answer? Anybody on the panel can take that one?
I mean, they'll probably all be, I mean, there's going to be multiple shards on Ethereum. And I think if they want to be composable, they'll all have to go into the same shard. So I don't know, in terms of compatibility, I think you'll still have the option to stay on ETH 1.0, will be like a separate shard on ETH 2.0. But to get the main advantages, everyone would have to be on the same shard, just like a very high level, that's my high level understanding of it.
Okay.
I think it's a bit too early to talk about ETH 2.0 because it's still quite far out, and I think breaking composability is one of the key things that the Ethereum developers are also trying to avoid. Yeah.
Great. And last question here. Question is, as a panel, are you sure in security, DEX is better than, oh, I see another question just came in, but we'll start with this one. Are you sure in security that decentralized exchanges are better than centralized exchanges? Anyone want to take that one?
I'll take that one. I'll take a step, okay? In theory, decentralized systems are more difficult to manage in terms of security because you have many systems to kind of protect and to look at. But there are certain things that if we can design the protocol in such a way that limit attack surface and things like that, then it is possible to make it better in terms of security, in terms of confidentiality, integrity, availability, and so on and so on. It is possible to do that. Right now, I have a student working on the forensic aspect of a distributed ledger system, kind of. And in my opinion, actually, a distributed system is better in that sense, in terms of security in that sense. So usually from my practical experience, most of the insecurity actually do not come from the protocol itself, but mostly come from the operation. For example, setting the like the easy password to guess, forgotten things, and setting up TeamViewer and leaving it there and things like that. So it's not about the protocol or the system. But coming back to the original question, a distributed system is more difficult to tackle, to secure. But in terms of this blockchain system, decentralized system, decentralized DEXs, to me, the protocol itself are better. So in a sense, it is actually much better than the central swing.
Okay. Great, thanks. And then we just had a question come in. I think it might be, let me try and catch the gist of it. So hopefully to get real multiple benefits of loan use cases to bring goods and services throughout the market, if only speculating might get bubbly, right? Okay, I'm not quite trying to understand the question.
So
but
I guess it's like a lot of crypto is used today for speculation, right?
Yeah.
Whereas if we're talking about mainstream adoption, we need the loan use case, the services, the markets, like maybe just a comment on like which direction are we heading at? Is it the right direction if there's too much speculation? I mean, that's what I got from this question.
Yeah, I think, yeah, Dennis, I think you're right. So I think the question here applies to both centralized and decentralized, but basically current use cases for any exchanges is primarily through speculation. We've seen a number of cycles. So I guess the really question is now with, I guess, with DeFi, is this sort of the type of use case that this ecosystem and industry needs, and what other types of use cases can really bring sort of everyday services to drive mass adoption? I think that's really the question. We'd love to get everyone's thoughts on that, because that's probably one of the most common questions I get at any blockchain related conference. Yeah, Dennis, go ahead. You interpreted it correctly. So if you want to, hear your thoughts first.
Yeah, I hope it's not just speculation, like the use cases, like the world, like you can apply it to so many different things and reduce frictions from so many different legacy systems that haven't changed in 50, 100 years time. This is our opportunity. That's why I want to see it in, streaming money and payments and identity and, gaming, NFTs. I want to see it hopefully flourish in much more than just speculation. But for now, I accept that those bear market cycles are very attractive to people who are coming into the space. But I think over enough years, it will expand enough to absorb all those different use cases apart from just speculation. Yeah.
Yeah, and especially in the environment we're in right now, where I think governments have printed $6 trillion in fiat just in 2020 alone. If the global financial crisis made a case for crypto in 2009, what we're going through right now will make that much stronger a case long term. Michael, what do you think? What are we looking at? What kind of triggers are we looking at to go from speculative activity to more everyday use cases?
Yeah, I would agree with Dennis as well. I mean, I think speculation right now is a very useful bootstrapping mechanism. I mean, making people money is an incredible incentive, greed and all that good stuff, right? So that gets people interested, and has gotten us pretty far. But eventually, exactly with the inflation statement, I mean, the rules of the protocol and the economics of each respective token are clear and transparent, and they're hard coded into these protocols. So I think that gives a lot of people security. They know that there's never going to be more Bitcoin created, so they can put their wealth in there and have it, protected against inflation. So I think that may be, one or two, the next kind of real useful use case is just protection against inflation, and I think that's pretty important. But yeah, as for all the other stuff, it will come. It's just a matter of maturity, in my opinion. But yeah, speculation for now, but it's a useful mechanism. I'll say that.
Okay. Anyone else want to add anything to that? Otherwise, I think we can wrap up.
I do have something to add, actually. So I do think that definitely right now there's a lot of hype and there's lots of new tokens and projects jumping on the DeFi bandwagon and just to make a quick buck. But I think that over the years of the ecosystem evolving, we have seen like many good use cases emerging. Obviously, the DEXs are one of them. But then again, like we mentioned earlier, you need tokens to trade, right? You need value to be transacted. And I think that quite a few recent DeFi products have shown very good market fit. For example, let's just take Nexus Mutual, which is related to the previous question about security as well. Being able to underwrite the security of a smart contract as an insurer, and so for example, if you want to use a DEX and you don't know, you're not very sure how secure it is, being able to buy insurance on this smart contract before using it, that's an incredible use case. And you can easily see this extending to not just within the decentralized ecosystem. You can go out into the real world. You can insure basically anything as long as it's verifiable by everyone. And this is, I think, definitely a use case that will expand over the next few quarters, the next few years.
I'll add an Indonesian case. In Indonesia, we got used to use electronic money like GoPay, OVO, Dana, Shopee Pay, and all those stuff, right? And they're not exchangeable. To us, it's a bit a pain if I go to the store and like, can I pay with GoPay? No, you can pay with OVO, or you can go with Dana and things like that. So these are just examples how micropayment should be the killer application, and on top of these DEXs, the payment system could be conventional one, but they can be converted into some kind of tokens and then merge it back. I don't know. Well, we'll do the magic, but I can see there are real applications, at least in Indonesia. On top of that, there are other applications like Indonesia. We have like a voting system. We've been using blockchain at the back end, things like that. But I can see that micropayments or Pico payments are going to be big in Indonesia. Blockchain based.
Okay.
Yeah, I want to add more about the centralized exchange. Toko Crypto now we exploring about the mechanism to DeFi program in Toko Crypto. So right now we have a program. Toko Crypto, we planning to be a gateway for DeFi in Indonesia. So right now we have on planning to create DeFi token, Toko token. So Toko token is the first DeFi token in Indonesia. We want to deliver a good solution for people can try adoption, and then they also can get a directly benefit if they hold the Toko-Token. I mean, based on the DeFi concept, hopefully we can deliver a good model of a token for people in Indonesia. Yeah. This is my
Excellent.
Yep.
All right. Well, thank you. I think we're out of time. Thanks everyone on the panel, and I'll turn it back to our conference host. Thank you, everybody.
Thank you.
Thanks.
Thank
Bye.
you.
Gentlemen, for the panel discussion. Thank you, Jin Chow, Dennis, Ivan, Pamanda, Michael, and also Pak Budi Raharjo for sharing with us tonight, especially for Pak Budi yang banyak banget fansnya malam hari ini ya. Baik, panel discussion kita sudah kita tutup untuk malam hari ini. Terima kasih banyak to all of the panelists. Sekarang saatnya kita akan melakukan pengundian lucky draw siapakah 10 orang di antara Anda yang sudah menyaksikan webinar ini untuk mendapatkan masing-masing $20 ya. Kita akan mulai mengundi menggunakan Wheel of Fortune seperti biasa. Nanti akan muncul email daripada Bapak atau Ibu sekalian yang menunjukkan bahwa itu adalah email pemenang ya. Kita akan mulai pengundian untuk 10 pemenang beruntung di malam hari ini yang sudah mengikuti webinar kita. Indonesia Blockchain Week 2020. Ya, sambil kita mempersiapkan untuk Wheel of Fortune berputar, saya akan mengucapkan selamat malam juga buat Bapak Ibu yang sudah hadir. Ada Misbah, ada Suparjo, ada Jabes, Aidil juga. Terima kasih banyak, dan juga ada Raymond juga sudah hadir malam hari ini ya. Baik, kini saatnya kita akan mencari 10 orang pemenang yang akan mendapatkan masing-masing $20. Kita akan minta untuk Wheel of Fortune berputar. Dan saya akan bilang stop. Berdoalah Bapak Ibu, semoga Bapak Ibu yang menang di malam hari ini. Selamat untuk Anton DT001@gmail.com sebagai pemenang beruntung pertama kita. Sekarang kita akan masuk ke yang pemenang kedua. Saya bilang stop. Selamat untuk Lutfi94@gmail.com. Kita akan mencari pemenang ketiga. Wheel of Fortune. Akan bilang stop. Bilang stopnya pakai bahasa daerah, nanti saya coba ya. Ada ewojpy@gmail.com. Kita akan putar untuk mencari pemenang ketiga. Jangan berputar, saya bilang hentikan. Coba kita cari pemenangnya, stop. Dan kita pemenang keempat. Patan Davidson@gmail.com. Selamat. Sekarang kita akan mencari pemenang yang kelima. Silakan diputar Wheel of Fortune. Stop. Dan pemenangnya adalah rahma.btscsby@gmail.com. Kita akan masuk ke pemenang ke-6 untuk malam hari ini. Stop. Dan pemenangnya adalah anadel@yahoo.com. Makin deg-degan Bapak Ibu sekalian ya. 3 pemenang lagi, kita akan mencari pemenang yang ke-7. Stop. Dan pemenangnya adalah Bang Ludizang@gmail.com. Selamat. Kita akan mencari pemenang yang ke-8. Makin deg-degan ya Pak Ibu sekalian ya. Stop. Inong belum pernah dapat katanya. Semoga Inong menang. PR@parezal1998@gmail.com. Selamat untuk PR. Kita akan mencari pemenang yang ke-9. Tenang, masih ada satu kesempatan lagi. Stop. Ini namanya rezeki anak kripto. ezagani53@gmail.com. Satu orang pemenang lagi yang beruntung malam hari ini. Siapakah dia? Kita akan putar Wheel of Fortune. Kita akan menunggu selama 2 jam. Karena ini pemenang terakhir. Oh enggak ya? Saya bilang stop. Selamat untuk Ferdian Tamtam26@gmail.com. Congratulations to all of the winners. Terima kasih banyak. Untuk Anda yang belum beruntung, tenang, masih ada webinar besok ya di jam yang sama. Yang jelas saya mau mengucapkan terima kasih banyak untuk Anda yang sudah mengikuti webinar ini dari jam 7 malam tadi sampai dengan selesai. Setelah ini akan muncul di layar Anda QR untuk Anda pindai atau scan untuk mengisi survei, di mana keyword untuk malam hari ini adalah exchanges. Alright, dan sekali lagi terima kasih banyak untuk Bapak Ibu sekalian, hadirin, keynote speakers, dan juga para panelis. Kalau gitu kita tutup webinar kali ini. Kita ketemu lagi besok di webinar dalam rangkaian acara Indonesia Blockchain Week 2020. Saya Nelsi Hombing pamit. Selamat malam Indonesia.